Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back for another brand new episode of WSI TV. I'm Jordan Bishop and I'm joined by Jim Samson.
Hello.
So before we get started today, I just want to remind you to hop over to WSITV.com and make sure to sign up for the Vault so you get all our free newsletters. Now, for this episode, we're throwing around a term that you've probably seen a lot in the news lately, modern monetary theory. So Jim, if you could just jump in, otherwise abbreviated as MMT, what exactly is modern monetary theory?
I think the first thing I want to say is there's nothing modern about modern monetary theory, just as there's nothing easing about quantitative easing. You know, easing isn't a verb I would use for something that creates more bubbles than it fixes.
Right.
But modern monetary theory is basically another word. It's just saying infinity war on deflation. We're just going to print and print and print, and it's giving it a fancy name to justify what effectively is a failed policy throughout history, where it doesn't matter how much the idea is it doesn't matter how much money we print.
Right.
It's academic.
Right.
And of course it's nonsense, which has been proven throughout history. You know, the only thing you can say about the dollar as being the reserve currency is that you can get away with it a lot more than say if it wasn't a reserve currency. Well,
Right.
Zimbabwe tried it and he ended up with the $1 trillion note.
Right. Yeah.
So you know, America has some leeway, but it can't carry on forever.
Right, yeah. I mean, basically, they're looking at unlimited money. It's like playing a game of Monopoly and adding more cash to the game just because you want to pay off and buy more things.
Right. I mean, the last time this sort of thing was attempted was in the 1930s. As you know, all this has really happened before. History is just playing over again, and it didn't actually do anything in the 1930s, and it won't do anything now. What cured deflation in the 1930s after the Great Depression was World War II, and let's hope we don't have to cure it a similar way this time round.
Right, I mean, drastic measures to obviously fix that issue. Now, I've got pros and cons written down here. I don't see many pros. I see a lot of cons. But in theory, it sounds good.
I mean, the pros in the short term are, well, the pros going back to 2008 were you are softening the blow in the short term of a harsh consequence of our actions. Ultimately, though, you are putting the nail in the coffin of the hammer started banging that nail, and ever since Nixon came off the gold standard in 1971, though. Right. So you're really just buying time, kicking the can down the road, you know. But it would be nice if you were doing something with the time you're buying. Right. But we're not.
Right. Yeah. And they think they're just going to pay off all that $22 trillion, or 23 now,
and counting.
And
Right.
Which, I mean, honestly, I'm just going to go out there and say I don't think that would work, you know. But I mean, it may look good, as you said, in the short term, but
ever since we've coming off the gold standard, it's all funny money, and this is really just the end game, the last round of nonsense. In what we have is a fiat currency, which is a currency not linked to anything of value.
Yeah, and as you guys know, we're not just giving you the bad news and leaving it with you. We will have an alternative that we'll get to in a second. Right. But let me ask you first, Jim. Do you see what was the Zimbabwe? It was $1 million.
$1 trillion note.
Do you see that?
They actually had $1 trillion note.
Yeah. Do you see that happening in the U.S. or if this?
Who knows these days, you know? But it's hard to imagine that here. There's obviously we have what seems like a democracy. We don't have the El Presidente with his gold, revolvers on each hip and that kind of business, like Zimbabwe maybe. But it's hard to sing the public. They're gullible up to a point. Our viewers obviously aren't, because we're keeping you informed, but at some point, everybody starts to wake up, but not usually until they can't eat that week, you know?
Right, and that's a good point. So gullible up to a point, and that's why I think we see these wild swings in the elections. You know, we get a sharp swing left, a sharp swing right, and those swings get wider as we go more.
And that's what we're seeing coming out. I think there's been polls taken where people are seeing the 2020 election as the most important vote they're ever going to make in their life, and all this kind of thing is going on. And that's a result of, we haven't had the Great Depression this time. We've had what we've named, well, maybe we did, but it's been a kind of stealthier depression. Or that our living standards have increased so much more since the 1930s that you know, the reduction in lifestyle doesn't mean you live in the park.
Right, yeah.
And we didn't have a Hooverville, although we did for a while after 2008.
Yeah.
But it's not as bad, you know, that we can still eat. You know?
Yeah, that's a very good point there. So let's talk about who's pushing modern monetary theory as we do get onto the election. Now, Bernie Sanders is a big advocate of this. So is Alexandria Ocasio-Cortez. Now, she's not running, but she ran Bernie Sanders' campaign last election. And they're massive advocates of modern monetary theory. So as you rightly mentioned, Jim, I think this is all riding on the 2020 election. I mean, what's your take on that? I mean, do you see Trump?
I think in one form or another, it's going to happen anyway. Okay. We're just talking about degrees of the extremity. Because there's no, you know, we're too far down the road with the trouble is that any politician who comes to power and is going to do the right thing is going to, you know, you take away the punch bowl from the party and you're going to throw the country into what should have happened, you know, by natural selection in 2008 and beyond, and that's not going to make you popular. All politicians want is votes, and they need money to buy those votes. So, you know, no one's going to do the right thing, and that's why these things have to play out usually with unintended and often very harsh, dramatic consequences.
Right. I mean, it's funny you saw that with Jerome Powell. He came in to the Federal Reserve, tried to do the right thing,
he did,
and realized that's not how it works in Washington.
And then I think both Trump and Powell realized that, hang on a second, we need to get voted again. And so hence we see this pulling back from trade wars. You know, I mean, the trade, we criticize the trade war thing, but China's been playing this game for a while now, unchecked. And all Trump was really doing there, to an extent, I think, was pushing back. And look what that did. So anything that tries to upset the status quo, other than, you know, catastrophe, isn't popular, and politicians, because it's a democracy, exist for popularity.
So we know where you stand on MMT. You think it's going to happen in some degree? I mean,
I think it's happened already. I think it's just another name for quantitative easing, because everyone's now saying, well, that didn't work. So we've got to come up with a new brand, new improved product. But I think we've got it anyway. We're just looking for different phrases, different punchlines, you know.
So I'm going to put you on the spot on another front here. 2020 election, it looks like there's 24 Democrats running against actually 2 Republicans, so it's heavily, unless others come in.
Well, that could be a bad thing for the Democrats. People could get overwhelmed with choice, and then they stick to what they know. I think when it always comes to elections, I think we've got to remember what George Bush Sr. said when he was beaten by Clinton. Bill Clinton was, it's the economy, stupid, as he so eloquently put it. He's saying that people vote with how happy they feel at the time, and a lot depends on what happens between now and the election. Is there going to be a stock market crash, or there's a recession? I think, you know, people voted for Barack Obama on the back of, you know, the financial crisis that unfolded like, you know, it was like 2 months before the election, and that's where that kind of came out of left field like that. So I hate to say it, but a lot depends on that. And what we can turn to is the stock market, and at this time it's not telling us, as we see today, it's actually doing an all-time high as we speak. And that's not selling us that anything's going to happen yet, but there's still, 15 months, 18 months, or whatever it is to go to the next election. A lot can happen between now and then. But, you know, Trump has always been unpopular to an extent. He's not been able to deliver on a lot of the promises he wanted to make. But I think a lot's going to depend. You know?
Yeah. So as always, read the stock market. I mean, we say look at the market all the time, and we are seeing something though. So if modern monetary theory does go through, there are two ways you can turn here. We've got gold, and of course we've got cryptocurrency, and we're seeing a bit of surge in these. Now, is this telling us anything about what we can expect next year?
It could be that it's predicting something that's going to happen in the election. One thing we might be able to say is that you may argue that because Jerome Powell's already tried this and Trump's already tried this, you might be make a case for, the Trump administration staying in would be less MMT,
right?
And if we get a Democrat, perhaps an extreme one, likes of Sanders, not necessarily him, but an extreme Democrat, then they're definitely going to turn to MMT. And gold in a midst of a lot of uncertainties right now, stock market included, gold and Bitcoin have broken out from significant resistance levels and are holding. And they're both alternative currencies. So is that telling us something about the election, that it's going to be a Democrat win? Is the market that sophisticated? I don't, it's still a way out. Or it could just be that, listen, the elections are relevant, and this is, things have started to move now for, the final round in the destruction of the dollar.
Yeah, absolutely. So those two things are giving us some signals. It's just time will tell what exactly they are saying. But of course, we have the charts to read in the short term.
Right, and that's why we watch them. We only make so many predictions, and our predictions are based on what the charts could be could be saying. And right now, with the stock market being the main one, it's certainly saying we're looking to push a little bit higher and confirm a few things, but right now it's saying all is no trouble on the horizon at least.
Yeah. Well, all in all, if you do see MMT creeping up on the horizon, or if you see signs of it already happening, like Jim said, it may well could be right now. GLD is a good gold ETF that you can trade, and GBTC will get you covered in Bitcoin right now, and there will be other cryptocurrency ETFs, I imagine, on the market very soon.
Yes.
So keep an eye out for those. Jim, I appreciate your input on
Thanks
all
for
this.
having me.
We'll see you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.